Hello, everybody. Thank you for joining us. We were just chatting backstage about how exciting it is to be here in Chicago and seeing TradFi and crypto collide. We're going to dig into that on this panel, All In Institutions and Digital Assets, to hear more about how some of the top thinkers in the space and Larry in compliance, how this was once a nightmare and increasingly less of a nightmare, I think. But we'll kick off with some quick intros because I'm always excited to do these. I was an anchor at CNBC and Yahoo Finance for a while, and I won't say which outlet said crypto would never be a thing and that I shouldn't focus on this stuff, because here we are. I don't know if that was right advice. But John, why don't we kick off with some quick intros to explain where we're coming from and why we're interested in this space.
Sure. I'm with Skybridge Capital. We're an asset manager in New York with exposure to crypto through multiple pillars of our business. Our fund of funds, we sub-advise a public equity ETF that's crypto products, and we have various individual asset vehicles that are exposed to crypto. We also have a conference business that's heavily involved with the crypto community. My background is chiefly technology, so I come to this sort of with a technology evolution perspective.
Yes. And Larry?
Pleasure. Hi, everyone. Larry Wade here. I head global risks, regulatory relations, and compliance for PayPal's crypto group. I also head up our corporate staff area, so I get to see the whole company and how PYUSD and all of our blockchain-related initiatives are integrated throughout PayPal. So really excited to be here.
And I'm Sara. I am a financial services audit partner with Crowe. We are an accounting and advisory firm. I lead the firm's digital asset practice, so I really sit at the intersection of traditional finance and banking and then digital assets.
And I guess to kick off, a lot of what we're probably going to be discussing is maybe more on the stablecoin side and how this has completely changed the financial stack. And also, just this Friday, we had tokenized shares of SpaceX trading basically at the same time of what was the largest IPO. So I mean, it's again, very exciting to think about how much is being made possible on the blockchain and on Solana as well, also, as we saw SpaceX shares trading there. Larry, why don't you kick us off just kind of talking about how big of a night and day it is now at companies that are actually leaning into what's possible.
It's mind-blowing. It's really exciting. I've been in the space just under 10 years now. Prior to PayPal, I was actually a management consultant at KPMG, and I actually was a part of building the first risk and compliance methodologies for blockchain and crypto, because they're slightly different. And literally, I got laughed at by everybody nonstop, saying this is a total waste of your time. Fast forward, a little bit of curiosity, PayPal decided to enter the digital asset space. I was fortunate enough to be employee one to build out the risk and compliance strategy for virtual currency business activity for PayPal. Again, get there's a deck, we were a startup. It was, how do we make this whole crypto thing work? The headwinds we had 5 years ago were immense. From a regulatory perspective, from a buy-in from audit risk and compliance committees and boards, and just from even stakeholders outside of the organization who could put pressure on. I am extremely just thrilled with where we are, even though it still seems a bit chaotic. But post-Genius, that's when we started to allow some kind of common rules of the road and to let merchants and TradFi start to lean in and really start to try to figure out, okay, how do we utilize this technology? And then you combine that with the rise of AI and agents and the notion of how are agents going to be able to transact value. Oh my goodness, it's a really exciting time right now, but night and day, still a lot of work to do, but we're here now.
A lot of, I guess, maybe Sara, on your side, figuring this stuff out is certainly not easy when it comes to, I guess, cutting edge technology and old school legal questions to figure out. But we were just chatting backstage about the SpaceX IPO and tokenized shares and how, it doesn't seem, where do you sit in terms of what still needs to be figured out around some of that stuff before we're really off to the races?
Yeah, I think there's a lot of legal questions that deal with stock tokenization. So for example, do you issue shares directly on the chain, or do you have a tokenized representation of an underlying stock? What happens to the voting rights? For example, we run into this all over. We see a lot of people that are interested in tokenizing AI tokens, that are interested in tokenizing equities, money market funds. But when you pierce through to the underlying asset and some of those legal questions, those are what a lot of our clients are wrestling with right now. But everybody is extremely interested in getting to the right answer, which I think is half the battle.
Yeah, and John, I mean, I guess on the investing side of all this, obviously it's not just public markets, also on the private market side, we're seeing a lot of the same things. I was chatting with the former chair of the CFTC, Christian Carlos, saying that a lot of the rules were written mostly in terms of 3-day settlement because it took 3 days for things to be sent in the mail. But if we're not operating rules around that anymore, kind of changes almost everything under the sun.
Yeah, there's sort of an element of this where we're using the technology to create efficiencies, and that's broad, and that could be, having to do with shortening the settlement associated with trading, and the exchanges are all going down the path of trying to expand market hours and take advantage of the technology to eventually achieve those efficiencies. And then separately, for those that are, using SaaS applications to make payments to contractors overseas or to manage payables or even integrated into ERP, suddenly you have an ability to, consistent with AML requirements, make payments really automated and easy in ways that you will soon take for granted, because there have been pain points associated especially with international transfers forever, and that's without getting into sort of the C2C or B2C components of it.
As a journalist, I guess part of my job is to play both sides. I certainly don't want to end on nightmare scenarios or things that keep you guys up at night when it comes to stepping into this new frontier. But Larry, I remember chatting with you about kind of on the stablecoin side, we've certainly seen experiments in the past, maybe not work so well. Terra being one of them, some of the other pieces of theirs. But now post-Genius, all these rules are written specifically to protect consumers. What do you kind of like focus on when it comes to answering some of those questions that still remain around KYC, AML, et cetera?
Yeah, so Genius passed, but rulemaking is still proposed. So we don't have the final rules yet. So we're trying to obviously kind of responsibly influence what is practical, what is going to have that safety and soundness for consumers, merchants, et cetera. But this is why regulation was so important. If you take an algorithmic stablecoin like Terra Luna, it's great in concept. And I say this to my engineers and product teams so much. It's, no, guys, this is amazing technology. But in the real world, we can't do that right now. I have that conversation so much. I'm like, no, I'm excited about it as well. So yes, this algorithmic stablecoin, it sounds fantastic until the true what could go wrong on the tail occurs, and then you have a blow up. And when you're dealing with something that you want to have as a dollar equivalent throughout the commerce ecosystem, it needs to be very safe, sound, and vanilla. So if you look at PYUSD, for example, or the issuance guidelines from even the DFS, or what I believe will happen, under Genius, you're looking at, T-bills 90 days and below, cash, overnight, over-collateralized reverse repos, maybe some tokenized, money markets, things like very vanilla stuff that's over-collateralized, that firms such as Crowe go in and do attestations in addition to the attestations of the issuers. And then you're able to really have something that is a true e-money equivalent to go throughout the ecosystem in a safe and sound manner, which is different than an algorithmic stablecoin or a stablecoin backed by other stablecoins or backed by other digital assets.
I use it as a good example of kind of where rulemaking is helpful for most everyone to kind of say, look, this is what is allowed, what is not allowed. And I guess that's kind of how an industry grows up in kind of getting to the other side. I don't know if there's anything else that you guys would say carte blanche is kind of something that you still think about?
I think we see a lot of still management of reserve assets and how those are being appropriately named. So if you are an institution that's going to have reserve assets, are those accounts bankruptcy remote? Are they separate from your own assets? Well, Genius gives some protections. It's really important on the legal end that those accounts are set up correctly from the beginning. So we spend a lot of time on the initial structure, making sure terms and conditions are clear to users, which is another thing that the Genius Act and most compliance functions focus on for consumer protection. So do people know exactly what they're invested in? Do people know what the backup is for these assets?
From kind of a consumer side perspective, it's something that I feel like maybe most people don't understand is we celebrate it as an industry, oh wow, Genius Act passed. And then you don't realize how much more still needs to come before, whether it's companies, whether it's teams, figure out the right way to do this. I mean, where would you say we are? I'll use the baseball analogy since I was just at the Cubs game last night, big win for the Cubbies. What inning are we in when it comes to kind of full out there Genius Act excitement?
Honestly, we might be moving to the second.
Really, that early?
Absolutely. So, you have Genius, you have Clarity, which is market structure. There's a little bit of overlap, right? So like when you hear things around like rewards and stablecoins, so there's a little bit of the politics behind all of that. then let's say once you have rulemaking for Genius, now you have to be able to adapt that rulemaking to your actual risk appetite and your company's overall risk and control universe. That stuff takes time. And then once you're able to do that, you need to understand kind of what fiduciary responsibilities do I want to have as an organization? Where do I want to play? Is it reserve management? Is it issuance? What is it? So there's a lot to think about, but what Genius did is it allowed organizations to actually think about it and then start to take steps forward. So PayPal, we have approximately 400 million wallets in 200 countries and a two-sided network. So I'm very fortunate that I get to see a lot. So whether talking to a major airline or talking to a bank partner or a network partner, I kind of know what everybody's thinking or trying. And a lot behind the scenes is our board is telling us we need to do something. We don't know. At the end of the day, in this technology, in my view, different than, say, AI, quantum, et cetera, is that a lot of this is fixing the existing infrastructure issues we have today. Whereas when I use Claude, it is a net new situation where I have an analyst sitting at my desk who can help me do things. That's really new. Us being able to say, rather than me pre-funding a disbursement partner for our cross-border payments product, I can settle with you in near real time, and now that lowers the cost of the transaction. It lowers the risk of us having to have funds parked, and we can pass on that cost savings to our customers. This is a pipes thing, so I think we're very, very early, which is super exciting, but we're in the game now.
Yeah, I think we're setting up for rapid transitions in a whole variety of contexts. You and I were talking beforehand about the challenges in some markets of holding a local fiat currency, which can be really dangerous. There's an app, it used to be called Dollar App, I think they just rebranded to ARQ, that allows people who live in some of those countries to effectively move their savings into dollars and then which is structured using stablecoins as the infrastructure, not as something that you're primarily engaging with. You're not engaging with a wallet, you're engaging with an app, but behind the scenes you have this new infrastructure that's facilitating it. And then independently you have a credit card that's using that savings pool so you can make local payments using the Visa or MasterCard network and get a fair, a much more competitive FX transfer fee than you would have gotten using traditional means. Those kinds of things start to grow in ways that sometimes exceed expectations, right? That's the normal process. Suddenly things become normal. You take for granted that you can Venmo somebody some cash. You take for granted that your payables system can execute an overseas transaction because you have the structural support of institutions like PayPal behind it. I think it's on the verge of accelerating substantially.
I mean, Larry, as someone who sits there within the walls, I mean, I guess that's kind of the dream scenario for people who have been building in crypto for a very long time. It was hoped that one day you'd get to the point where, oh yeah, Venmos will be using stable coins and you can handle all that. And now it sounds like basically that's the directive. Yeah,
and it's funny because PayPal owns Venmo. And for 9 years, Venmo and PayPal could not talk because of the tech debt associated. And it wasn't until we enabled the ability to transfer on-chain for PayPal and Venmo before you could actually move value between those two platforms. And it's all within PayPal. Like, think about that. And fun fact, the first transaction between PayPal and Venmo was actually a Bitcoin transaction. Now, all of a sudden, you introduce PRUSD, which is a dollar, basically. You can now transact throughout those ecosystems, and that's free because it's all within the PayPal ecosystem. So in those situations, we actually don't even need to go on-chain because it's within our overall ecosystem and sitting in the same FBO Omnibus account. Mm-hmm. But then you do also have that flexibility to say, all right, I do want to go on-chain and I want to send it out from my Venmo wallet to my friend in XYZ, and that could occur too. So all of that is kind of being built now. And I like to look at this as kind of in three ways. So I think of the world in analogy, so pardon me. But we have this bridge and it was built and it worked for a long time. But it's a bit creaky and we all know that it works, but there's lots of enhancements to be made. We're building that bridge now. That's that new infrastructure. So we're parallel pathing there, and then ultimately what's best usually ends up winning. Simultaneously, what is the accelerator to all of this, in my view, is that our job right now is to kind of fix this Web 2, Web 3 human component. What's going to happen when we start introducing agents? None of us can fathom that. When the agent is operating thousands of agents on your behalf and making, We have no clue. So we have this ability to extract an immense amount of value from what's happening today while simultaneously building a foundation that will be used for something that has exponential opportunity. How many times do you get an opportunity in your life to actually work on that? So that's where I kind of see it.
Yeah, well, I guess we'll definitely come back to the AI component on that in a sec, because there's a lot to unpack there, and John was just showing me backstage that you've built multiple apps using AI just yourself, so I still have a lot to learn and get caught up on. But Sara, I'll throw a harder question to you too, because you deal with this in the audit space all the time, but to actually, I think, legally figure out what Larry was just talking about there, it's been interesting to watch the idea of what Bitcoin was supposed to be in terms of peer-to-peer money, not really having intermediaries, and then now maybe some of the re-intermediation of finances when it comes to issuing stable coins and having someone sit in between. How does it look from like a compliance perspective when you start to reintroduce some of those things, and the decisions that go into stopping some of those transactions from a government lens?
Yeah, there certainly requires a really strong compliance function. You need to do on-chain monitoring. You really need to know your customer in advance. A number of companies are using white label wallets. People depend on providers like PayPal to be able to provide that type of technology. I think one of the challenges that we see are, traditionally banks are not real great at allowing you to send money to one another. You have to go into a bank, you have to fill out a wire form, it's expensive, it takes a lot of time. You already were going to a Venmo or a PayPal if you needed to transact easily, which is somewhat outside of your traditional bank system. This really adds to that, but it does require companies that are going to get in this space to make sure that they've gone through their due diligence, they have the right third parties in place. If you're going to onboard the technology yourself, you have the right auditors, you have the right consultants, you have SOC reports, and you really understand what your product is, who your customer is, and where your borders are. Because if you're going to transact in different countries, there are different compliance rules for that, and you need to make sure you can identify your regulator properly, which is more of a challenge than you would expect for a lot of organizations.
I think it's one of the interesting things when you think about at least kind of certainly buying into the idea of libertarians basically saying, hey, look, we don't want to be regulated, but not regulated. Maybe that's not the right way to phrase it. We don't want the government to step in between peer-to-peer transactions, and thinking about the other side of that coin, what it maybe enables.
You know, the service that is out there that needs to be provided by institutions like PayPal, you know, that are going to be the guts of this, will be AML and reporting and fraud detection and all those things. And the more of those things can be taken for granted, the more free everything else will start to move. You know, I have this old car, which I drove here today. It's sitting outside. The car's drinking age. It's got a coin holder in the middle, because when I bought that car, you still had to throw coins into the toll booth, or you had to pay coins at the parking meter.
Does it also have the push coil?
It absolutely does. It does.
This one's always scared me.
And so, you know, things change fast. I have to send money to Canada, pay tuition for my daughter. I have to pay a wire fee. It's ridiculous, right? And the infrastructure to accommodate that transaction, consistent with things that we all take seriously, that need to be accommodated, is the support that's now emerging, that's built into apps that we're going to start to take for granted. And I think it's a bigger change. It's going to lead to more behavioral changes, more things that we take for granted that are integrated into all the solutions that we use from enterprise down to consumer, that we're going to start to really appreciate over time.
I throw out all those regulation questions mostly because it's something that I've had to deal with as a founder myself in trying to figure out how to actually tokenize a media outlet and pay dividends to people via the tokenized co-op model. And that was a mess to figure it out back in 22 when basically anyone in crypto was getting sued by regulators. But let's shift to the stuff that we're all super excited about in terms of what's coming next. And John, maybe I'll turn this to you as we think about what Larry brought up in AI and automate, you know, basically taking the humans out of a lot of these transactions and setting this up. But what does it look like in terms of the TAM? What gets you excited as an investor in this space, just thinking about what's now possible when you've built the rails for money to move so quick?
I think the big change that hasn't been assimilated yet that is occurring is the fact that the coding is automating. Because once you can automate code, then you start to open up the potential for development along avenues that were impractical in the past, and that change is that's applicable from everything to robotics to payments to just the enhancement of the kinds of applications that are already in your enterprise. And that pace of change, I don't think we really are understanding where this is going yet. I think that's, as I was showing you with the apps I was able to develop, something that's just now starting to dawn on people. As it engages with the stablecoin infrastructure or payments generally, that's up to your imagination. Smart people will be thinking very hard about what to do with that. I think that application I described where locals in places like Argentina can avert the threat of their devaluating local currency is one of those, and there'll be a rapid pace of exploitation associated with that coding automation.
Yeah, I don't know if there's, from where you sit, Larry, if there's something else in that. You touched on AI components slightly.
Yeah, I mean, so the way I look at this is, so right now, and again, the human portion of this, the engineering and the product work, there are some brilliant people doing fantastic things. So the real friction, from what I see, is really on the bespoke requirements of each country and regime. That is way harder. We just launched in 70 new countries. This is hard stuff because what the UK wants is not what Singapore wants, is not what Colombia is okay with. And you have to understand from a reg and legal perspective, what can I do and how quickly can I pivot if they decide to change? And you're dealing with money and value here. So they change quite frequently. So, being able to take all of the existing BSA, AML sanctions, fraud, all those great controls that we have, and that's kind of how I look at it at PayPal. It's when I speak to regulatory partners and they say, well, how do you handle this? I say, okay, today in our fiat business, you're comfortable with our BSA, AML sanctions program. You're comfortable with buyer-seller protection. You're comfortable with how we're monitoring fraud typologies, right? Yeah, we're good there. Okay, I can do all of that, and now it's plus. Because I have on-chain analytics tools to be able to see the attribution of a wallet. Because I have the continuous monitoring of nefarious and non-nefarious activities throughout the ecosystem. So it's all plus. So it's actually a more safe and sound environment to build upon. So that's kind of like the messaging I send there. So what I get excited about is if you have a more safe and sound value transfer mechanisms that's faster, cheaper, we're near instant finality, and it's programmable, what kind of velocity of transactions does that unlock globally? So that's super exciting. Then again, on the other hand, on my nerd AI hat, right, it's being really comfortable with we are hitting a point in the curve where there's exponential change, and humans have a very big problem with exponents. That's why most people miss things. Yep. But directionally, look at where things are going. Do you think the world's going to be more digital or more analog? If you think it's going to be more digital, well, then the train is stopped. Because game theory says if we stop, someone else is going to do it. So this is not going to stop. So then now you got to ask yourself, is there a native value transfer mechanism for this new digital age? There isn't. It is blockchain rails. I was a management consultant on Wall Street for a very long time. I've audited the SWIFT operations for the largest bank in Japan. I've seen a lot of stuff. And again, I also know how PayPal works, where you think it's instant, but no, there's really credit risk we're taking for you to settle instantly, or I'm pre-funding over the weekend, and it's costing me $26 million a year on wires to do all of this stuff. So I'm just excited about the fixing the now and unlocking the velocity of transactions there, and then what is the velocity of new activity that we cannot fathom that has nothing to do with humans? How does that look? And then lastly, how do you still bring the safety and soundness of this environment to what we know? Because the thing, and I think a lot of the AI kind of CEOs got this wrong in their messaging, it's you don't want to say this technology is so powerful that no one can control it, and then we're all just not needed and everything. That doesn't make any sense. So then when you start talking about safety and soundness of value transfer, it's, yeah, the agents are just doing whatever they want. No, we're still going to have to figure out how does this comply with regulations? How do I have agency over my account that this agent may have access to? All of that stuff we need to figure out.
Yeah, I think maybe comparing some of the AI tools to nuclear weapons might not have been the greatest idea for some people building in the space. Maybe not surprising that regulation and some of the government control came there. But Sara, when it comes to, I guess, the idea of exciting things still to come, to Larry's point, it's accelerating the pace at which people can build. I get excited about the capital formation components of really allowing a community to kind of share in the upside of something. That's like kind of the core of what I think a lot of people in Web3 are drawn to. But you were also excited about kind of the idea of more normal transactions, we've talked a lot about stablecoins, but in real estate specifically, that's another one where it's like it can take forever for anything to close.
Yes, it does, and you have to use a title company, and it's very expensive, but with some of the companies that are being really innovative in trying to tokenize real estate, we think that's a really exciting area. We're getting a number of calls for different, like hotel companies, different large buildings in Chicago and around the country where, certainly somebody like myself, for example, could not go out and invest in that building, but if you tokenize it and you have a piece of it, then can you tokenize the rents? Do you tokenize how you're getting the payment streams? There's a lot of legal questions with that too, and each state, not even countries, have their own kind of regulatory regime. They're still working it out for stablecoins, so I don't think they're all there yet for something like real estate. But some of the legal questions that we run into are things like, well, has anybody ever foreclosed on a property on a blockchain? If you directly issue it, I don't believe so. So how does that work? How does ownership transfer? It's the same kind of question with equities. You have to be an accredited investor to invest in some of these companies, or at certain times. How do you know the people holding that token or your tokenized equity are accredited investors? How do you follow those regulations? How do you stop it from being transferred? So those are a lot of the questions that they're wrestling with, but I think it's really exciting that people are trying to figure it out, as opposed to just saying it's too hard.
And my advice to those in the crowd on that, it's, again, keep building on the tech side, because obviously that's important. Understand that the tech can outpace the government and regulatory requirements for the region you're trying to play in. I know it's not fun, it is just the reality, okay? You're trying to ask really busy people who have many things to think about to wrap their heads around very complex topics that they don't have to think about 24/7 like we do. So if you see that as it is what it is, leaning in to say, can I build the most risk-based, compliant products and services that I can? And that will end up being a moat for you, in my view, because regimes will occur. This will start to become more BAU from a rulemaking perspective. And those who are more in line with the requirements of what the system wants, you'll be able to now, in my view, innovate and scale faster because you'll have a better foundation.
It's kind of a reminder that there was a dream in this community 5 years ago, 6 years ago, along the lines you were describing about paying dividends on the business you were trying to launch, right? And that dream had a lot of different characteristics, and some of it was really beaten back by the regulatory environment, and we have multiple changes occurring at once. We have the stablecoin legislation, we have the potential for the Clarity Act, and the rulemaking around that, and then we have this new technology transition, AI built around it, which accelerates. Any small group can now develop a meaningful platform and a strategy. So then you start to ask, well, maybe some of those things that we've given up on or set aside start to come to fruition, right? That would be remarkable. It's not out of the question. You might find local businesses that are available, that are making, loyalty or a regular participation associated in some way facilitated by stablecoins or crypto, more imaginatively engaging in a very simple way. That's kind of prosaic relative to what we used to talk about and what we talk about now.
I think it's a perfect point for a Washington and Wall Street kind of focused conference. It's kind of the idea of what America represents and kind of owning things together. And it's a point that's brought up all the time in terms of DAO governance and how that can be built effectively, and kind of how America functions as a democracy that's lasted as long as it has. So I would echo that point. It's a beautiful.
It's been obscured, wouldn't you say, or even given up on to some degree because.
Are you talking about crypto or the country?
Crypto and good question.
It depends, but I would say these are the tricky questions of figuring it out, and really, if it is the idea, as we touched on, if SpaceX and other companies are going to stay private for longer, and you only give most people access to these companies post-huge debut, and then they catch the tail end, is that really is it better than what could have happened with tokenization? I think these are big questions. And I think maybe the right way to close this panel out might be the excitement of what you think Clarity could change if we do see it happen. The biggest things that you guys will be watching for. If we're only in the second inning of post-genius, there's still a lot to look forward to for Clarity Act.
Well, the whole premise was the orchestration of capital, right? And the federation of capital and ownership around the deployment of an infrastructure in a way that was different. You call it down management. That has been hard to really enact, Right? If clarity allows the economics to flow through in a way that could really facilitate that, then we go back to that original vision, and that's an open-ended new subject for a panel.
Yeah. So right now around the world, you're starting to see this bifurcation between stablecoin regimes and digital asset regimes. In the US, that occurred. Genius is stablecoin. Clarity is more the digital asset side. So being able to have Clarity and Genius in the US, that's just a true thumbs up for the entire kind of population of what we want to do. Yes, we'll need to work things out, but once regulation is in place, it typically is not rolled back. So if we can just kind of get it in there, that right there will now allow everyone to kind of have a license to play, and that's really exciting. And again, all we want is minimum requirements to ensure that we have a level playing field. That way we can innovate to help society overall and solve some cool problems.
Yeah, I would agree with that. All of our clients are very excited. They're very much hoping something passes just so that they have some kind of guidelines to stay between. And if they know what the rules are, they can follow them. But operating in ambiguity tends to slow down innovation. Everybody kind of wants to be the first to be third because there's no rules yet. Once that passes, then I think that'll change and people will start to invest faster.
On the closing point, I suppose, I would also echo that it's a win for both. I guess the right answer to country or crypto would be that this is exactly why you see so many people working really hard right now to deliver on the idea of the US continuing to lead in capital markets. Just because they live on crypto rails and are more efficient doesn't seem like a bad thing for that to happen. I don't know if there's any other thoughts there as we wrap things up here.
One last thought, I would just say Washington and crypto here, Wall Street and crypto. There's been like these 3 schools of thought. It's been the old native Web3 of down with everything. We're just gonna build and burn the whole system. That's not gonna happen, okay? Then there's, when I talk to a lot of my TradFi partners, it's well, this all works, and I've been doing this for 30 years, and this is fine, and Swift, 3 days, 35 hours, Swift wire, that's fine, it works. Okay, innovation doesn't stop for anyone. It's gonna be this beautiful marriage, I believe. And when you're kind of looking to solve these problems, think of it from that lens. If you're traditional, don't just come in saying, this is what I've always known. And if you're totally native Web3, don't come in just thinking, screw all of this.
Yeah.
Because tried and true stuff actually is applicable.
I think it's an important note to leave on. Thank you guys so much for listening, and thank you guys for letting us chat up here. Thanks, guys.
Thanks.